Here we are again at the Trader 24 studios. With the suspension of casinos and resorts in Macau adding to the already negative investment climate, markets continue to be risk-averse, seeking safer havens for funds. And recognizing on the one hand that equity markets are facing liquidations in all major exchanges, and on the other hand that energy costs remain unsustainable, affecting the already high inflation, we have before us a puzzle whose picture points to a rather problematic remainder of 2022, with risk now expensive and investors asking for significant rewards for taking it on. The US dollar and natural gas remain unstoppable, gold and silver are plummeting to everyone's surprise in such an inflationary environment, and the bond market remains in an obvious liquidation trend with the big funds crying out for cash holding needs. You are watching the Trader 24 Daily Global Market Overview. Let's take a closer look at the situation. On Wall Street, the otherwise positive announcement the day before yesterday of a 372,000 increase in NFPs in June, while it was expected to increase by only 250,000, it was perished in the fire of reluctance, which is obviously catalyzed by the forthcoming release of the CPI data, whose change will also decide the short-term directionality, recognizing that inflation is a major problem for the domestic market. And given that Wall Street has been on a downward crescendo for weeks now, and that Friday's levels, which were not reached, relate to serious resistances that could halt the upward reaction attempted in the context of the partial easing of pressures, the risk of a downward continuation is present. S&P 500, Nasdaq, and Dow Jones closed close to their intraday lows, minus 1.15%, minus 2.26% and minus 0.52%, permanently in negative territory with market indifference evident in most of the large cap and sectoral stocks. Only two S&P sectors closed positive, real estate and utilities, with telecoms at minus 2.3%, consumer discretionary at minus 2.3%, and technology at minus 1.3%, recording the largest losses. The picture was similar in small cap, with the Russell 2000 at minus 2.11%, heavily weighted down, while the VIX risk index gained 10.55% to 27.24 points, demonstrating the opening of the betting gap in favor of a fall, or at least no rise. The key players in large cap were Endo minus 15.39%, Twitter minus 11.30%, and Didi minus 10.57%, which overweighted the board, especially the second one, driven by the news reports that Musk is walking away from the well-known deal. In the technology sector, Peloton had a poor performance, minus 12.63%, Pinduoduo minus 10.03%, and Zoom minus 9.53%. While in the industrial Dow Jones, 13 of the 30 stocks that were rescued with a positive sign did not manage more than a plus 0.70% of P&G. In the pre-market now, most listings are moving down, with the Chicago futures agreeing to a negative open, at least for now, with Asia also in negative territory as the Hang Seng lost 1.29% and the Nikkei 1.77%, apparently in the shadow of the new lockdown. We recall that the mood is catalyzed by the upcoming June CPI results. The market is talking about 8.7% in total and 6% in structural, with energy now accounting for 34.6% of the total, a level not seen since 1981, with fuel prices rising 106.7%, setting an all-time record. Europe's markets record losses on the major stock exchanges. The DAX and CAC 40 at minus 1.2%, while the 50 and 600 Euro stocks at minus 1.20 and minus 0.90% respectively. The biggest losses were recorded by the German Covestro stock at minus 4.31%, followed by Daimler at minus 4.1% and Deutsche Bank at minus 4.02%. On the macro front, the European Central Bank signaled a moderation of the aggressive 30 basis points rate hike to 135 basis points in the coming weeks, with the problem of historically high inflation at a median of 8.6% remaining the heavy problem of the period. In U.S. Treasuries, sellers took it in stride after the flurry of selling in recent days, leaving the 10-year yield at 3%, 5 basis points lower than local highs, with that of the 30-year climbing to 3.20%. The yield curve remained at 10 basis points, with the 2-year around 2.90%, confirming the sensitivity of the bond market to the Fed's words. In Europe, the German Bund reduced the yield to 1.18%, and the spread of the Greek is estimated at 236 basis points. In the forex market, the U.S. currency continues to strengthen, with the respective DX index recording a new 20-year high above 108.5 points. While the euro's major exchange rate against the U.S. currency is hammered, seeing the historical parity. The pound now stands at 1.18 and the Swiss franc at 1.015. The yen-dollar exchange rate is also at 24-year high above 137 yen. In commodities, the problem of very expensive natural gas is intensifying, with the American Henry Hub at $6.46 per million thermal units, while the Dutch TTF has climbed to 170 euros per megawatt hour. Crude oil remains above $100 per barrel, while gold and silver remain undervalued, with the latter having lost as much as $19 per ounce, apparently weighted down by liquidations that are not justified by the current market situation. In terms of economic releases, nothing earth-shattering is expected today, but tomorrow the focus will be on the results of the US CPI for June, with forecasts suggesting that the index will stabilize at the same level as in May. A few hours later, the weekly crude oil inventories results are expected, which had soared in the first week of July by 8.235 million barrels. On the same day in Europe, the UK's GDP results will be released on an annual, quarterly, and monthly basis, with the annual GDP at 8.7%. In terms of corporate announcements, today we expect PepsiCo's financial results, where forecasts call for earnings per share of $1.74 and revenue of $19.51 billion, increased by 8% and 6% respectively on an annual basis. Ether and Terra remained the negative protagonists, with the former recording losses of more than 6%, while at the same time the big Bitcoin loses $20,000 with losses of more than 3%. Recall that the problem of controls on the major stock exchanges remains in the shadow of the problems that emerged from the Terra USD and the Luna token front. In the headline ranking, Ether and Tether stand decently behind Bitcoin with $128 and $78 million respectively, with DAI now losing $10 million and Polkadot beating Polygon in the $4.4 million war. Thank you for joining us today. It was the Trader 24 Daily Global Market Overview. Stay tuned for our next comment on the financial markets.